Welcome to Markets Now. I'm Michelle Work along with Brugler of Brugler Marketing, and hogs ending mixed. Cattle to the plus side today, but a lower day on all the grains. And let's start off with corn, double-digit losses. Alan, and we took out some key support areas. Some of this was this China cancellation. Do you anticipate more cancellations?
I think there's still some risk of additional cancellations. I don't think we're talking about them washing out the entire 2-week purchasing program at this point, but clearly the Brazilians got to them and said, you don't need to buy as much U.S. corn as you did. We'll be able to cover you on some of your needs. And in the interest of socialist solidarity, you should be buying from us instead of the Americans. So, yeah, you're getting some cancellations here. The open question is, would they rebuy if prices get cheap enough?
Yeah, I was going to say, what value level do we have to get at here for them?
Well, we know the original purchases, a lot of them were made with May around 620, and we're getting down close to that level right now. So whether they're still willing to buy at that level, we don't know. But this is the price level that was attractive before.
I know you have a lot of producers probably asking, how much lower these prices are going to go here before the bleeding stops. And some of that's going to be predicated on what the funds do from here on out. So are they short this market yet, or do you think they'll push short?
Well, I think they added some longs after the big Chinese buy campaign. It looked like that was going to allow us to make the USDA numbers for the year and keep those ending stocks tight. Now that's in question, so they're definitely washing out of their longs. There was a lot of liquidation of the May contract around the time the options expired, which was a week ago, and that's continued this week. They haven't replaced those in the back months. So I don't think we're net short yet, but we're getting pretty close.
And wheat has not done the corn market any favors here, but wheat scoring contract lows, I think, on all three exchanges. Are prices too low? Do we deserve to be at these lower prices with the fundamentals that we have?
Well, we're pretty darn cheap, and if you look at stocks usage ratios and where that would apply, the price should be, yeah, we're too low. But of course, we're still revising those supply demand numbers based on what we're able to do on exports and production. The long-term uptrend line in Chicago is about 580 to 585. That's off of weekly and monthly charts, and we're not quite there yet. So that's kind of my worst case scenario for this swing of the market. Again, we've kind of had a piling on effect here. You got some rain on the HRW crop. You got increased Canadian production estimates, and of course downward pressure from Russian export sales. So all three of those things are kind of pushing us back towards where we were before the invasion.
But how much does the rain really help those HRW areas, and can we get all the spring wheat planted in Canada or even up in the Northern Plains?
Well, I think those are great questions. On the HRW, our view is it will improve some of the wheat. I mean, some of it was in good or excellent condition, just not very much of it. Yeah, there's some tough areas in Oklahoma and the Texas Panhandle that are not going to benefit much if you throw an inch on them now. They're just too far along for that to really help, for maybe other than maybe helping your grain weight a little bit. More kernels survive, but the spring wheat, yeah, we're a little behind on planting. The snow's melting off. You've had localized flooding, but not widespread at this point. Most of the spring wheat in the U.S. gets planted the first 3 weeks of May. That's just coming up here. So yeah. I think the jury's out on that one yet.
How accurate is that Canada number since they took that back in like December?
Well, it's kind of like the U.S. planting intentions. It's mainly a warning to the producer, hey, this is what everybody else is doing. Are you sure this is what you want to do? So, okay. Yeah, there's some questions as to whether they can get it all in. But what's your alternatives? I mean, you could go to you're pretty much committed on your canola already. You could maybe switch to some lentils or something. But for the most part, I think they're going to stick with their intentions if they can.
Soybeans, we're holding support on the weekly continuation, but do you think we're going to take that out? Is it going to hold here?
Well, I think the realistic way to look at this is Brazil had a record soybean crop, and they're going to be shipping record amounts or near record amounts for the next several months. The U.S. is going to get very little in terms of export sales business. we're kind of dependent on the board crush and what we can do for domestic. And meal futures were selling off this week, so
Right.
makes it a little hard to justify a rally until one of those things changes. Either meal bounces or we get some export business that we don't currently see.
Yeah, and we got a little bounce in meal today, but you were down at like 4.5-month lows. How vulnerable are we, or how concerned are you that we are going to blow out those longs out of that soybean meal market?
Well, I think we are washing out some of the fund longs. They had a very large long position in meal. Of course, the bull story there is Argentina doesn't have much of a crop. They're actually importing Brazilian beans to crush, and they're still going to be light on crush this year, even with that. So there is a story there, but technically, I don't like the fact that we broke out of that consolidation zone to the downside on meal.
Cattle, they have been consolidating, but June's only like $1 from the contract highs here, and beef prices push past the 310 mark on the choice here. Do you think we have enough gas in the tank to get back up there if cash starts to stabilize here? Because we haven't had a good test yet this week.
Yeah, we haven't had a good test. We know there's going to be some seasonal weakness. June's normally at a discount to April. That's fairly typical. That said, where we are in the cattle cycle says that prices are going up over time. That you just don't have the availability of cattle. Now today, with the slow GDP growth first quarter for the U.S., that suggests maybe the consumer might have to be a little more conservative. But the big story is on the retail prices that the pork is actually higher than it looks at the wholesale level at retail. Beef is actually a little cheaper at retail than it looks at wholesale.
And I got to ask you, feeders, the back months, August on back scoring new contract highs. Feeders have got to, if they keep going higher, fat's got to follow, don't they?
Well, there's no law that says that
no
a feedlot
law,
has
no
to make money.
guarantee. I get it.
Yeah, there's no guarantee on making money in this business. That would generally be the case, but again, the feeders are going to be very high at the peak of the cycle simply because when you start subtracting heifers to go back to being mama cows, then feeders get really scarce.
Right.
The market's anticipating that this rain will maybe improve pasture conditions, but at this point, we still don't have the cow-calf guys standing up, waving their hands and saying, I want more cows.
Sure. So the hogs had a very strong day yesterday. June got above $90. We had a marketing year high in pork exports, but we didn't see a lot of follow through here today. Are we waiting for the cash to catch up, or what's going on?
Yeah, the hogs should be going up here seasonally. That's a normal cycle. We cut slaughter into the summertime. The market typically is anticipating up to a $20 rally from the spring lows to the summer highs in the index. Right now, we've got less than a $10 premium in there. So, we're very pessimistic about pork cutout demand here, and I think that could change. I think we're probably bottoming here on the board, and we're trying to bottom on the index.
Yeah, we should have a big rally though if the funds start blowing out of these shorts, don't you think?
You certainly could have, certainly a $5 or $6 rally,
Right.
maybe more than that. Once everybody looks around and says, yeah, that's the spring low.
Yeah, we got to get there first. All right, thanks for joining us, Alan Brugler with Brugler Marketing, and that's Markets Now.